Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, December 6th, 2024. Ron Quaranta here with my dear friends and co-hosts David Brill and Josh Klayman, and our dear guest, the one, the only Emma Channing. Before we begin, our usual disclaimers for everyone who's watching. Obviously, please do keep in mind that nothing discussed is accounting, investment, legal, tax, any kind of advice, especially when David and I are talking about tokens. And then obviously everything we're talking about as well are really our own personal opinions and don't necessarily represent the opinions of our individual firms. We're still recovering from the election news and all of these appointments, but I want to spend a minute. Emma Channing, welcome to the show. How are you?
I'm very well, Ron. Thank you for inviting me.
It's great to have you. We've got lots and lots to cover. Plus, you'll have to tell us about Satis Group later on in the conversation. David, Josh, I want to kick off with some news if we can. Obviously, the big news of the week that's made the crypto industry super happy is the appointment or the nomination rather of former SEC Commissioner Paul Atkins to chair the SEC. David, when you saw that news, and for everyone in the audience, and Emma, you know this as well, David and Josh get way too many text messages from me in a given week. David, what were your thoughts when you saw the news?
I thought this was a balanced choice. It was somebody who's going to be able to get it confirmed because he was confirmed before. I think from what I've read about Paul, I don't know him personally, he seems like a pragmatist, somebody who wants rules but doesn't want rules for the sake of rules, but wants rules because you need certain rules in place. And so, I'm optimistic. I think some people were optimistic about Gary Gensler when he came in, and I was more on the skeptical side. So I think people are optimistic, and I think since President-elect Trump does want to have a pro-crypto, cabinet and folks in different regulatory positions, it seems like a positive choice.
Emma, Josh, weigh in on this. What were your thoughts as well? Emma, why don't you start when you saw the news?
I think there was a range of interesting candidates. I think he's obviously, a significant corporate and policy experience presence. Hester Peirce has come out in support of his appointment on Twitter and a few other channels. I think it's absolutely sort of the Clayton type of person that the industry, but also the wider financial services industry, from a blockchain technology perspective, wanted to see. I think it's a shame that Teresa didn't make it. Particularly in the much broader context of what's going on with this administration, and also the SEC more generally, it would have been really nice to see a woman appointment. At least that's my view. But and she looked a great candidate. But still, great choice, and look forward to what he'll bring to the SEC.
Josh, to Emma's point, obviously there were a range of potential candidates for the role. You and I and David and others in the WSBA have met Commissioner Peirce as well. Again, what were your thoughts about the nomination of Paul Atkins? And, again, to Emma's point, let me expand the conversation a little bit. It's not just about crypto per se, although that is certainly the focus, but lots of regulatory, what I'll broadly call burden that came out of the SEC over the past 3 or 4 years. What were your thoughts? And does a magic wand get waved and a lot of this become a lot easier for us?
So I don't know about a magic wand, but I will say the market sure liked the appointment. I mean, we saw Bitcoin soar to over 100,000. So I think that's a resounding support. What I would say, there was so much, I don't want to say noise leading up to his actual appointment, but, chatter maybe is a better way to say, because we had so many potential, candidates being floated.
Yeah.
Right. I think also, even in the days leading up to when he was appointed, there were reports, who knows whether this is really what he was saying, but that he had some hesitation reportedly about taking over after Gary Gensler and taking what some were calling a bloated SEC. Right? We've seen this also, we've heard it, or rather seen it on X, where Chris Giancarlo, Crypto Dad, said that he had no interest in taking over and quote, cleaning up Gary Gensler's messes again after he had to do that at the CFTC following Gary Gensler. Now I said quote, but that's not actually an exact quote.
Josh, thanks. David, one of the other interesting conversations about all of this is the idea that, and you might have seen the article, that the current chair is placing people in very important roles within the SEC. I'm not a lawyer, so David, help me understand. Important roles like enforcement, for example. And this idea, you've probably seen the news and the articles around even going out the door, the current chair, who is clearly not a fan of crypto, is laying the groundwork for people within the regulatory agency to make it difficult for crypto firms to, quote unquote, come in and register, for these cases to go away or be settled properly. David, do you have that same opinion?
Well, I'm of the view that once a new chairperson comes in and the commissioners are settled, that the new chairperson will pick people that he wants in certain roles. So, I'm not totally familiar with the dynamics on that kind of a granular level, but I imagine that since there was a vacancy in the division, the head of enforcement, that this is a replacement. And then I think that when the chairperson comes in, when Paul gets confirmed, that he will choose someone of his choice, that he believes should run it, and whether it be the person that's been named or someone else. I think what I've been hearing from people in DC is that there's a concern that during this lame duck session, that the current administration is going to take its final shots at the industry. And so, maybe this is part of that, or maybe Silk Road, the 2 billion of Bitcoin that the government has gets sold before Trump comes into office. So I've been hearing some rumblings about that. And so maybe that could be part of this, that appointment could be part of that process.
David, thanks. Shout out to Dina Ellis. Thanks for the comment, Dina. Commissioner Persinueta worked for Atkins when he was at the SEC under President Bush. And Josh, go ahead.
Oh, no, I was just going to say, I didn't want to forget, which is someone who formerly worked at the SEC with Atkins, who shall remain nameless, had provided an anonymous view that Atkins would be more likely to move fast and break things, which I know in our industry, we hear a lot. From a governmental agency perspective, it's an interesting perspective, but also when we think about, the Department of Governmental Efficiency, that's really going to be, it seems, moving fast and breaking things. Maybe we might see some big changes. Maybe efforts to thwart changes might not be successful. So
yeah, Josh, thanks so much. Emma, weigh in on this, and I wanted to get your perspectives when we look at how the SEC's operated. One of the things, Emma, and you've probably seen it, that I often raise to David and Josh is no one's going to walk into a regulator and basically snap their fingers, and all of the kind of overhang of things that have been happening there simply go away. How do you see that playing out, Emma? Do you have any thoughts about that?
To me, the SEC is a very multifaceted beast. And as someone who, has spent a lot of time in public company advisory and securities transactions, I'm very used to dealing with Corp Fin. And obviously, Josh and I are very familiar with dealing with Valerie. But on, the other side of the SEC is enforcement and also trading and markets, and they're a very different beast. It's a 5,000 person organization.
Yeah.
And I think, not wanting to take his name in vain, but I think Nick Morgan has made some very thoughtful comments around the fact that the most significant, most troubling aspects of the SEC tend to actually be after the commissioners have actually signed off on an enforcement, and it's handed over to that division. And the one thing, that has to be said for Paul Atkins is that he doesn't necessarily have that commercial or criminal litigation background. So it remains to be seen. So there's that piece. But there's many talented people who may well step forward within the organization. That being said, there is a great deal that can be done from a policy perspective, particularly regarding SAB 121. And I look forward to seeing, a speedy resolution of that.
Emma, thanks. David, I wanted to raise something. I'm going to rip up the script just a little bit on us, and it's one of the more controversial items that I'd seen in the news. David, tell me if you disagree, but without naming the firm names, there have been certain pretty prominent firms that have said SEC folks and attorneys who leave the regulator and look for jobs in the crypto sector, those firms that hired them are going to lose those crypto firms as clients. And I remember sending you a text, David, that felt a little punitive to me. Am I overreading that kind of commentary?
It's fascinating. But what I will say is, having been a GC and deciding what firms I wanted to use for the companies I've represented, it's the company's choice. And the companies have the right to choose the law firms they want to represent them. And if they choose to not want to hire firms that have hired people that have been prosecuting cases against the industry, or maybe prosecuting cases against those companies, it's their choice. And I certainly understand if that company who you're referring to didn't want to hire a law firm that hired lawyers that were prosecuting cases against them. I think the one thing we do have to remember is that there's a difference between the attorneys that are managing the whole group and the attorneys that are, as part of the government, doing the assignments that they've been given and are part of the team and may not have autonomy over what projects they work on. But look, I think ultimately we have a really strong ethos in the crypto space, and I think it's important that different companies state their views, and we're very fortunate to have like platforms like X where people can talk about their views and share them, and we can have this healthy debate.
David, thanks. Josh, Emma, I want to throw one last thing when we talk about the nomination of former Commissioner Atkins. David, you had noticed a bit earlier, does this nomination go through without much challenge? And the reason I bring that up is we've already heard some folks on Capitol Hill saying, well, he might be a little lax in regulatory enforcement. He might, not focus on some of the investor protections. Josh, am I overreading some of the things people in DC are saying?
So, I'm not the best at reading the Washington, D.C. tea leaves. I'll just say that. But what I would say is, in my view, he's qualified insofar as he's had role like that, right? As when he was a SEC commissioner previously. I think that I would imagine he'll pass, unless barring some kind of scandal that we're not aware of. In terms of the range of candidates who were presented, I think he seems like a confirmable choice to me. But maybe there are insights that I'm missing. Emma, if you have any, I'd love to hear them.
I have colleagues who are much closer to the administration and the confirmation process than I am. So likewise, I wouldn't say I necessarily have any great insight, but particularly as George W. Bush's SEC commissioner, you would expect, as you say, a certain amount of support.
Emma, Josh, thank you both so much. Josh, I want to address one more kind of legal thing that came up in the news recently. We're definitely covering it on Monday's legal working group meeting for the WSBA, which, by the way, is the last legal working group meeting of 2024. Josh, I can't believe it. But the Tornado Cash reversal. For the audience, can you explain a bit about what happened there? And I'd love the group's conversation or thoughts about what are the ramifications of that. Josh, do you want to start us off?
Sure. I can give broad brushstrokes,
yep.
As well as some thoughts on implications. I would say, as many of you are aware, probably in the audience, the Fifth Circuit reversed a lower court's decision that had found in favor of Treasury, OFAC, right, with respect to the ability to sanction Tornado Cash, right, the smart contracts. And we've seen a number of cases, right, including by certain trading platforms and others, right, in respect of, and also Coin Center and others, where they've brought up many important things to think about when it comes to Tornado Cash and whether and how sanctions could apply. But in this Van Loon case, the Fifth Circuit said, no, actually, you can't sanction Tornado Cash smart contracts. The smart contracts are not a person, they're not an entity, they're not property. And the discussion within in the decision is quite interesting insofar as it talks about the different types of strategies and structures that were used, to try and show that there wasn't necessarily control and things like that, right? Where this leaves us, and so what they basically said was this is outside of the statutory perimeter, right? That OFAC had exceeded its statutory authority in trying to sanction Tornado Cash. Where this leaves us, on one hand, it's definitely a positive for DeFi in terms of DeFi moving forward. What I would say though is I think there are cautionary aspects to this, because remember, we can't shut down these smart contracts, right? And to the extent that we also can't sanction them, I think we should just think about what other kinds of protections, if any, might be appropriate or the governments might want to see with respect to national security.
Right,
so I think
Josh,
that's a bigger point. Sorry.
Really good point. Emma, David, when we look at what Josh described, no one on the call, and certainly no one that we know or work with in the ecosystem, sanctions need to be enforced. We being compliant is an important part of what we all focus on. Emma, where does OFAC and the Department of Treasury go from here with this? And thoughts?
I would hope that they, do some thoughtful thinking, but also circle back around with Congress and think about how best to address this. I very much support everything that Josh has said, but I sit a little bit on the fence. As in, yes, they created a approval ceremony which made the smart contracts very independent, but clearly they were mixers.
Yeah.
What we were supposed to step back and go, oh yes, poor little coders, you created something beautiful. That's the point at which I jump off the ship.
Emma, I think we're with you, but David, so if the answer is not suing software, David, following on from what Emma's talking about, how do regulators and OFAC, for example, focus on the right things to do in this space?
I'll take a deep breath on that. Look, I think there's a privacy element and then there's the OFAC element. And look, I think people use mixers for perfectly good reasons, and there's some people who use them for illicit reasons. And so I don't know if there's a perfect answer. I certainly have a view that I'm trying to think of a good way to put this. I would say it still needs to be thought about. What I don't want is rash sort of decisions made without thinking of the first and second order effects of taking certain positions. But I think the Fifth Circuit is right, and I think this was just, the premise was wrong. Like the legal premise was wrong in this case. And so I'm glad that the Fifth Circuit reached a conclusion that I think is consistent with the law. So I'm giving you a bit of a non-answer, but I think there's more of a thought process that has to go into it.
I get it, and we'll see where it goes from here, David, particularly with the new administration. Josh, I know you've got something to add to this as we wrap this portion up.
Yeah, just to build on what Emma was saying, and also David, going back to Congress, perhaps to increase the regulatory, the statutory authority if necessary, right? But again, I think a lot of thinking is necessary. One of the things that I had been thinking, I was like, okay, well, they still have the FinCEN 311 powers where they've designated all virtual currency mixers as being a primary money laundering concern. But I mentioned that to someone in our industry. I don't think I'm allowed to share the name just because of the nature of the form in which I shared it. And I said, could that provide part of a solution? And that person, who has a background in fin crimes, had said, actually, that's just for reporting. So it really is, something that I think as an industry and as a nation, we should think about. I do think, though, a lot of the points that were raised in the litigations surrounding Tornado Cash about privacy, right? And the ability, say you receive your paycheck in crypto, and also say you want to make a donation to a candidate in crypto, shouldn't you have the ability for non-nefarious purposes? to do that. But I think this is a sign of things to come. I mean, we certainly saw also, which we talked about last week, the striking down of the SEC broker rule,
Yes.
right? Because again, there was a decision that, again, I think also in the Fifth Circuit, right, or in a northern district of Texas, right, which falls within the Fifth Circuit, that the SEC had exceeded its authority. So I think this sort of thing we're going to see more and more of potentially just across the board.
Josh, really good point. Thank you all. For everyone in the audience, again, thank you so much for joining us. If you've got questions, please put them LinkedIn Live and X and YouTube as well. David, we've got to pivot to a bit of news. When Bitcoin broke 100,000 the other day, and I'm sure your heart stopped a little bit, realizing you'll probably lose the 125,000 steak dinner bet. Let's peel back the layers of some of that, David. I was looking at some of the latest data. Spot Bitcoin ETF, total AUM over $111 billion now. 100K didn't last long as a support level, David, but what are we seeing in price action now?
A lot of price action. I think the first thing is that people are really continuing to use leverage, and you're really seeing that. And I think that in some ways it's very interesting because people really want to get exposure and really want to take directional bets, but they're also doing it at a scale where they're too exposed and they don't have enough collateral to back it up. And so you're seeing the markets moved. And I think we move within a $10,000 range, when we hit 100K. So I think that there's still a lot of leverage in the market, but this market is annoyingly efficient in a way, in that it sort of hunts out the liquidity on both sides. But the one thing that is really important to emphasize is that we don't, in these kind of events, we don't have any kind of like catastrophic thing coming from this. There's a finite amount of collateral that's at stake and what can be lost. And so we don't have to worry that, an entity can be just totally put into a margin call and other positions being affected. It's really those leverage positions in Bitcoin that will, that could be affected. So I think, there's an efficiency to the crypto markets that's very interesting that played out.
David, I feel like you're hearkening back to the old Lehman conversation that I'm sure you and I we all had back in 2007 and then 2008. Josh, Emma, obviously we don't give investment advice, but I don't know about the two of you. If you know friends and family like I do, once it broke 100,000, I got the calls that said, hey, should I buy some? Well, why didn't you buy some when I told you to get it 2 years ago? Josh, Emma, what were your thoughts? And again, I know there's a legal focus to the everyday for you both. Has 100K Bitcoin changed the conversations with clients or with your firms? Josh, do you want to start?
So I would say definitely with clients. I mean, the more, it wasn't just Bitcoin that moved in price, right? And I think the more that you have, the more you can do, right? Yeah. And so I think that, yes, that does change the conversations. But I think also, I know, at least speaking only for myself, there's a kind of exuberance that I feel, right? And then I think others feel as well. I know some of us, including Emma, and others, we were posting throwback photos of, early days of crypto and things like that. I will say, I have to say this, I was very happy to note that in the throwback photos of groups of women in our space, not one of us, knock on wood, has gone to jail or been embroiled in some kind of scandal like that. So, your mileage may vary, but I'm women of crypto.
Emma, what about you? And is the exuberance, are you seeing the same exuberance? And I'll ask the three of you, are we approaching irrational exuberance? But Emma, tell me what your thoughts were when we crossed 100K.
My thought was that David's going to lose the bet.
Yes. I'm so happy you're here, Emma.
For people who don't obsessively watch this, there is a bet between David and Ron that is going to pass 125K by the end of the year. I'm actually on Ron's upside of the bet. So I was very pleased to see that. I think we continue to see it. It's a store of value. In terms of where I sit, I do a variety of things. So to some extent, it's it's not relevant so much to the application of DLT to financial services, but in terms of everyone who's building, and how that obviously Ethereum and ETH and then EVM compatibles sit on a different value structure. Again, no advice, but that's valued not so much of a store of value, but because it's it's the computing layer. But to see that positivity come in, and I think you need to step under and go, where did that come from? And that came from a positive administration, a positive leader, the SEC, the industry no longer being hunted down, and innovation hopefully returning to the US in a way that we've seen driven offshore.
David, as a follow-up to Emma's comment, ETH this morning broke 4,000, if I recall correctly. I'm not sure if it's still floating there. David, you and I had this conversation as well. We've often, a lot of people do quote Bitcoin as gold to Ether, silver. What's driving 4,000 on ETH in your mind? And are the altcoins being pulled up to follow that?
So the first thing I want to say is I went on Polymarket, and you have a 9% chance of, just so you know.
Either way, I win, but we'll figure it out.
Yeah. No, I've actually got a Barolo picked out for the steak dinner that I'm looking forward to.
You are terrifying, my friend, but go ahead.
So I think there's a few things at play. I'm going to pick up on something Emma said, and I'm gonna expand out. I think this exuberance really comes from a view that the last few years, companies in this space really were minimizing what they were doing in the US and were on defense. And I think the view is now that the building that's gone on behind the scenes is now going to be unveiled, in the US. And I think there are things that people have been doing that they're will be more comfortable doing in the US. So I wanted to say that. When it comes to Ethereum, I think people also need to remember that a lot of the other tokens are way below their all-time highs. So Bitcoin's at its all-time high. Ethereum is still, $1,000 below its all-time high approximately. So 25%. So I think there's a lot of room to run in the altcoins. And so I think what we're going to see is, Bitcoin, sort of the dominance of Bitcoin over the total crypto market cap, slowly go down. And I think maybe by the middle of the month, we'll really start seeing the altcoins start to move more significantly. And so, and this isn't my term, we've seen some of the dinosaur altcoins move, like Stellar and I think Ripple for other reasons, and then a few of the other ones. But I think we're going to see more of the other, altcoins start to move. So that's my sort of viewpoint.
David, thanks. Emma, I've got to tell you, I get the sense David's going to start pushing me towards a double or nothing bet for 250 at the end of 2025. Josh, I know you wanted to weigh in on something. Go ahead.
Yeah, I mean, I was just thinking, as Emma and David were talking about store of value. We saw Jerome Powell come forward and say that Bitcoin it's not a competitor to the US dollar, it's a competitor to gold. And we saw Peter Schiff with his commentary on X, on going the other way, perhaps, to say the least. But what I would say is, for particular altcoins, I mean, the appointment of David Sachs as this new White House AI and crypto czar, which I think is, really brilliant to marry the two, because they're both, showing that these are key must wins for the US. I mean, he has a background from PayPal, right? But he also has some association with a particular token that I won't mention. But interesting to think about the implications.
It is interesting. Josh, David, Emma, thank you all so much. I want to raise one other thing, and Josh, you alluded to this in some of the public commentary. I had the opportunity to listen to a very famous business news outfit yesterday morning, and they brought in one of the very famous economists who's not a crypto fan. And David, it's interesting. It was the same old tropes. And I mean that with all due respect. It was, well, they're not currencies, and they're not a unit of account, and they're not a store of value. David, how far do we still have to go on what you and I often call the education curve when you have old line economists who've been in the industry for 20, 30, 40 years, in my mind, and respectfully, still not seeming to understand what Josh is alluding to? It's a competitor to gold, for example. How long do we still have to do this?
So, sometimes I wonder if what's being said publicly is what people believe. And so
Uh-oh.
I saw that Jerome Powell comment, and I was thinking, and I'm listening to him, and he's saying, it's not a threat to the dollar, it's more a threat to gold. And I'm thinking to myself, and he's saying it's not really being used as a currency. And it might be a narrative that he's sort of sliding in between who's been leading the past administration and who'll be leading the future administration, and trying to have a narrative that sort of suits, where he sits in the world. Look, I think the only reason why it's not being more used as a currency right now is we don't have stablecoin bill, and we've had this sort of administration that's been hostile to crypto. So we haven't been able to use crypto in a way that it has a utility for. I don't know who you heard speaking yesterday, but I think we have to remember that legacy finance will be impacted by the use of crypto as a currency. Like, if you think about stable coins and what it costs to use stable coins, it's a lot less expensive than using the credit card rails. And so, this can threaten some revenue streams for legacy players. So I think it serves certain people's interests to speak, in a certain narrative. And so that's my take on it.
David, Emma, Josh, thank you. We've got to get to the macro news, and I can't believe I'm going to say this, but Josh practically has a degree now in macro, simply listening to me and David yammer on about it. But we had some important economic data that came out this week.
And
David,
Emma, let me just say.
And Emma,
Also
yes,
Emma.
absolutely. Jobs data, I think hiring is expected at 227. It came in line. And I believe it was unemployment ticked up to 4.2%. David, Josh, Emma, you often hear us talking about, and we often talk about the parsing of the data, and you've all heard me say it's not the data, it's the revisions that will always matter. But let's ask the question, David, do we get an interest rate cut in December? And do you refinance the mansion when you get the cut?
Yeah. Well, since crypto's done so well, there wasn't a need for a mortgage. No, I'm totally joking. Look, I think we get one. I don't think we need one. I don't know that we should be getting one. But then, I think President-elect Trump wants lower interest rates. So it's an interesting, conundrum we're in. I mean, the 30 years is still pretty high to have another rate cut. So I think we get one. I don't think we need one. And I'm not quite sure how the market's going to react to one. But I don't think yields are going to go down very much, even if we get one.
Josh, Emma, comment on that if you care to. And I know the kind of macro is not the day-to-day for both of you, but I would like to follow up with David as well on why don't you think we need one? But Josh, Emma, I wanted to give you both a little airtime on it if you're interested.
So I would just say on this, I'll defer any comments to you guys. There are stuff later that I'd like to chat about, but this, you guys, full steam ahead.
David, why don't we need it?
I don't think the needles move right now in a way that it's going to affect the economy in a positive way. Like, I really view the rates need to go down over time, but I don't think we're at a place right now where it's necessary. And I think we can't use these in a way that isn't appropriate. And if the markets are pushing back against it and the yields are going to stay high, I think it takes some of the steam out of doing these cuts.
Interesting. Emma, did you want to weigh in at all? I always ask folks if they want to weigh in on any particular topic.
This is absolutely not my field. But in terms of anecdotal and things that I do see, particularly, and this is not a judgment in any way, but I do live away from the coast for most of the time. The level of credit card debt is really at an all-time high, as well as actually housing debt. And so that rate has a very real day-to-day impact on how much money people have to spend. And, I know it gets much abused, but Polymarket has spiked the odds today for a 75 bips decrease. And they've got that currently at 87%.
Wow.
And a buy yes is 0.4 cents and buy no is 99.7 cents. And if you look at the amount bet, there's a very significant amount of money bet towards that 75 bips decrease. So my money is always on poly market, but also I think there's a very, very, very real day-to-day sense of pain in terms of housing debt and credit card debt. And, I do very much hear where David's coming from, but, people are struggling.
Emma, it's a really good point. Go ahead, Josh.
Well, I was just going to say, marrying the two things that you guys are saying. I mean, David, if you think that the treasury yield isn't going to go down, then those credit card rates and mortgage rates might not move down either, because it seems like that's what's been keeping the mortgage rates up higher, right? Despite the cuts. This is me pretending to channel.
I'm so happy to hear you talk about this stuff, Josh.
Yeah, no, look, I think, I'm in favor of lower rates. But I mean, let's be honest about the credit card rates. Even if you get 25 basis points, they're going to go down from on the low end from 19% to 18.5%, and then on the high end from 30% to 29.5%. That's an issue that has to be addressed, but that's what the market is bearing right now. I totally agree with Emma. I mean, I do think our housing market is stuck because interest rates are too high on mortgages. But that being said, I don't think that the market, even if we get this 25 basis points cut, I don't suddenly think that the 30-year is going to go down 25 basis points. So that's really my issue. But I think, you made a good point. It's something we talk about, that why I think low and middle income people are struggling so much is that these rates are high. These credit card rates are being passed along in stores to people that hadn't been done before. And I think that's an underreported story too. But Ron, what do you think? I know you have a view on this.
I not surprisingly, I tend to agree with all of you. And I think the other thing, and Emma alludes to this very directly, and we've all spoken about it. It's one thing for business people and market people to hear personal consumption expenditures, and the Fed says they're doing this. It's a very different thing for people day to day who are buying food and fuel. And I think there is a persistence within the economy in inflation on some portions of the economy that impact those in the lower middle brackets that are still being hurt by it. And I still think there's a lot of work to do. It'll be interesting to see where it all goes. David, Josh, Emma, thank you all so much. We're running up to time. I wanted to talk a little bit about some of the stuff we've got going on for the balance of the year. David, Josh, we have our annual holiday party in New York next Wednesday. Emma, we wish you were in New York City. We'll have to fly out to you for a party. Josh, I know you've got something else to mention. I'm so sorry I cut you off talking about the Fed New York report. Josh, let's give you the air. Go.
Sure. Just for a quick second, You may have seen that the New York Federal Reserve came out with a report in the past week about digital assets and about their potential impacts on and risks to financial stability. And so the takeaway is that the impacts on the broader financial system remain minimal, right? And so although there was an emphasis on things like the growth of stablecoins, digital assets, DeFi, et cetera, they said it's not really at the scale to pose any systemic threats. They also talked about stablecoins and highlighted how, despite instances in which there were some challenges in our space in 2022, to say the least, including in connection with Terra Luna, that really had no real meaningful material effects on the broader financial or global financial system. So I just thought that was interesting.
It's an important report. We'll probably share the link when we post the video, Josh. Emma, David, it does raise one thing, and Josh, you opened this Pandora's box, so I'm doing it. Emma, David, you probably saw some of the articles on Operation Choke Point 2.0. David, I think you shared some links as well. Tell us about the thought you have. Was there an Operation Choke Point 2.0, and how does the FDIC play into this? And again, this is all public information, but was the industry right?
So I had heard anecdotally from several companies that this had happened. And I think what's happened is, that Mark Andreessen did this podcast where he really talked about it and gave oxygen to it. And then you've heard a lot more anecdotes on X, and now there's this article on CoinDesk today. I think really there's going to be more to unwind, but it's something we've talked about on this podcast before, that when you have regulated entities that are having pressure being put on them by their regulators, they're forced to make decisions. And in this case, it looks like the FDIC was expressly telling entities not to bank crypto companies. But I think the really harmful part about this, again, is just the lack of transparency. If this was what was going on, companies and the public had a right to know about it. And I think that is really the failure. And I think, and I don't want to get on my soapbox today, but we had 3 bank failures last year.
Right.
Did that happen because of regulator interference? Was that market driven? There's a whole cascading effect. There's effect on shareholders, there's effect on employees,
Customers.
there's effect on pension funds,
Yep.
and customers and companies that potentially didn't have access to capital. These are very, very important questions that I don't want to make a judgment because of the information's coming out.
Sure.
But it's something we really deserve to know the answers to, and I think the public deserves to have the transparency for. So I think this is a much bigger deal, but I think we really need to find out everything, really get more of this to come out.
Emma, do you agree? And I would ask, do you think this will be something a next administration investigates?
My perspective is that this isn't anecdotal. It was absolutely going on. It was established as illegal before. The same law firm has written a very interesting paper about 2 years ago that this was ongoing, and it was the same drill. I actually personally have seen internal policy documents from major top 5 banks. So for me, it's not anecdotal. I've actually really seen it happen, and I have to say it's disappointing. And when I was writing the paper that draft testimony for the Digital Asset Subcommittee of the House back in June, it really was in the back of my mind that this was a policy, administration, executive decision driven issue, and I generally hope to see it rolled back fast.
Emma, thanks so much, Emma. Emma, as we approach Tom, I do want to get a little airtime to talk about, and I'm hoping I'm saying it correctly, Satis Group?
Saying it correctly, Satis is the technology company that I run with a few other friends, and we've been doing this since 2016. We design tokenization mostly for financial services, but also for other things. But in terms of me, I'm going to be putting a few others kind of first and post next year, and I'm most likely going back into a law firm. So I'm talking to a few firms at the moment and looking to do, both some crypto and DLT work, as well as actually going back to some international M&A and securities work. So it's going to be a mixed sex.
Emma, if we can coordinate when David loses the bet and you're in town in New York, we'd love to have you join us.
I will very happily come in. I would cheerfully come in for the party next week, but I actually have to be on a different coast. So,
Emma, thank you so much. It was such a privilege to have you. David, Josh, as we begin to wrap it up, we're approaching the holidays. I want to say we're winding down, but I'm always terrified when I say that because as we approach year end, there's always something that happens. David, does your magic 8 ball tell you something about the time between now and the end of the year?
Well, one thing, it tells me I'm going to win our bet.
Oh,
but that was the low hanging fruit. I do think that we're going to see an acceleration of money go into the Ethereum ETF. And I do.
Interesting.
Again, we're not making price predictions, but I think we're going to see an acceleration in the price of Ethereum based on that inflow that's coming in. And I do think that we'll see some altcoin movement in the second half of December. Mm-hmm. I think this is really going to be a golden age for crypto in the next couple of years if these appointments follow through and we really see a loosening of the regulatory burdens that we've seen the last couple of years. So I think that bullishness will play out in the first quarter of 2025 and altcoins and Bitcoin and the price. So that's my sort of hot take.
David, thanks so much. Josh, before we let everyone go and David pours his Bombay Sapphire gin and tonic and hits the beach down in Florida, what are you going to be focusing on for the coming weeks?
Wow. Well, there are some announcements that'll be coming out from certain clients soon. So I'll be focusing on those, which I can't say what they are yet. But I would also say, just building on what you guys were just talking about banks, I would say from the bank perspective, there definitely, in my experience, is a renewed interest in banking, crypto companies, projects, people, both from a traditional banking perspective and an investment banking perspective. So I would say that whether it's in terms of thinking about compliance, if one is to do this, I will say in real time, this is something that I think the recent news and also the election are having an immediate impact on.
Josh, really good points. Josh, Emma, David, thank you all so much. Emma, it was such a privilege to have you join us. Contrary to popular opinion, David, Josh, I will not be spending the next few days just planning the party. We are actually planning, believe it or not, our next trip to DC, which is actually probably happening in Q1 of next year. We're going to leave it there. For everyone in the audience, thank you so much for joining us. Emma, thank you again for being here. If you've got additional questions for Emma or Josh or David, please email us info@wsba.co. We will be back next week. We will leave it there, everyone. Thank you so much. Have a great day. Josh, I feel you wanting to say something.
I want to say something. I have to say something, which is for those in the audience, I think many of you likely know Emma Channing and know her well and for a long time. Yes. But if you don't, she is truly one of the luminaries since the very beginning. So if you do not know Emma, look up Emma and follow Emma.
As I do now as well, Emma, I do follow you repeatedly. And thank you so much for joining the show. Thank you for watching, everyone. We'll leave it there. Have a great weekend.
Thanks, everyone.
Bye.
Bye.